Well, happy Tuesday, folks. Well, I hope you're having a happy Tuesday. might have a little bit of good news for you, but what we're going to talk about today is what happened in the banking sector yesterday. So if you own any stocks in banks, you probably lost about at least 20% just yesterday. And we're going to dissect that a little bit. But what's causing a lot of this stuff? Well, is inflation, and now what the Federal Reserve has done. They've increased rates way too fast, way too high, and a lot of the banks and a lot of the other markets just can't keep up with it. So that's our context for today. So I changed up my screen a little bit. This is what you guys can do is if you're in a mortgage advisor, or you're a loan officer, I would highly suggest you get MBS Live because it's probably one of the cheapest systems out there. We are actually in the process of creating something like this on our own. But if you want to find this because it gives you tons of data, subscribe. You can subscribe down below, and I think you get a discount if you do that. You can also subscribe to my newsletter. It's down below. You get this context like this. You get a daily report at the end of the day. You get a Friday recap. And you get a bunch of things. I don't sell the data, and it's absolutely free. So check it out down below. All right, so what you're seeing in the markets right now is we have the MBS 6.0. I changed this up a little bit, the form right in the middle of your screen, right through here. I'm just kind of clicking through. That number is up 9 right now. But you can see on the other side of the equation, the MBS 5.5 is down 28. Kind of a big disparity there. The biggest reasons behind, or let me tell you the differences between those. The MBS 5.5 is the 5.5 coupon, and the MBS 6.0 is a 6 coupon. What we try to do is, all you really need to know is if you subscribe to this or you're watching this and want to figure out what in the world's going on, is just pick the coupon that's closest to the rate on the 30-year rate that's there today. Okay, so we have rates in about 6.5 range, so we're going to look at the 6.0 coupon. What you see on the other side of this equation, up over through here, is I put in, instead of the 10-year Treasury, I put the 2-year Treasury. So you guys can see, because I get a lot of people that say, well, should I watch the 2-year Treasury, the 10-year Treasury? What should I watch to monitor mortgage rates? Well, monitor the MBS market. That's what you should monitor. Like, for example, if you own stock that's traded on the New York Stock Exchange, well, why would you look at what's going on in the NASDAQ? Because it doesn't have any reflection on what your stock is doing. If you're in the stock market and you get that, I hope you get that. So let's go over to some of the headlines that we have today. So the economic calendar that we have is right here on the board. It's just basically today is just inflation numbers. So we had 3 that came out. We have the core CPI, CPI year over year, and CPI month over month. Okay, what is core CPI? Basically, core CPI is the whole CPI index. So basically what it is a basket of goods and services. And what they do is they stamp a price tag on those services. So let's say they take 15 elements or 20 elements and they put a price tag on that. So they blend that out, and that's what the number is. So then the next month, what they do is they take that same basket of goods, they figure out what the price is, and they compare it to what it was the previous month. And then they proceed and go out. And then they can analyze what has it done from month to month and what has it done from year to year. Okay, what the core CPI is, basically they strip out food and energy. Why? Well, because last week on my way to work, gas here was $3.90. Today on my way to work, it's $3.33. So energy is hugely volatile, and a lot of food is, like eggs. We saw eggs double in value last year. Whatever. But so that's what happens is, so what you're seeing on your screen is core CPI actually went from 0.4 to 0.5, a 1/10 increase there. But let's dig in a little further. The CPI year over year the previous number was 6.4. They expected 6%. It came in at 6%. That's good. Again, remember a few months ago it was 9. So we're coming down. No, we didn't go from 9 to 2 because that probably can't really realistically happen, but it's coming down. And then you have the CPI month over month. It was supposed to be, your last reading was 0.5. This reading, expectations were 0.4, and it came in right at 0.4. So the number on inflation is looking good, and that should be positive for the markets. We go over to Yahoo Finance because I'm kind of tired of CNBC. You can see right here, look at the Dow Jones is up 300 points. It basically brought back everything that it lost yesterday. And across the board, basically, we see green, 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 green. You see right here, the headlines, inflation's rise 6% over last year's and February's slowest since September of 2021. Now, not a lot of news channels are going to give you that because they want the shock and all. They want you to see, and it's like, oh, inflation's out of whack, and they'll click it. But it's always nice to get the truth. It's just like, it is the lowest since 2021. That's fact. Okay, so that's the biggest thing in the markets right now. The other thing that we're going to see is bank jitters. You know, it's all about banking. But you're seeing the markets actually kind of putting that aside right now because they're finally finding out that it is centralized to some specific banks that took probably a lot of risks. And I took some flack yesterday for saying, you know, about President Biden, you know, he won't help this bank, but he'll help student loans. That wasn't intended to tick everybody off. It was just to make a point that, you know, the government spends tons of money on specific areas that's good for their PR, but in areas where they should be kind of really concentrating on, they don't. Okay, so that's one of the biggest areas I want to put it. So I wasn't trying to step on anybody's toes there. You can see down through here, the Dow Jones, again, it is up 300. Well, it's up 341 now. S&P is up 61. Down through here, the VIX. The VIX gives us the volatility. As this number really goes high, that means people are scared. They're trading like crazy and things are going nuts. We love when it's kind of stagnant or down. Gold is down because yesterday it took a huge run, and oil's down. Okay, so this means gas prices. Oil about, let's look at the oil chart just so you guys can get a feel for what's going on with oil. Why I don't think we should really continue to have almost $4 to $5 a barrel in oil. So let's just go over where it's been for the last 3 years. So if you go back in oil, here's where the prices are. Look where we were back in June. Oil was at about $120 a barrel. Now it's 74, okay? So it's $40 less. So it's a big drop in oil. So the oil companies are making record profits, as we can see by the Q4 findings. Their financials were probably one of the best in history. All right, so if I know this is a mortgage channel, but we want to start talking about just finances, keeping you guys abreast of what's going on in the market. Yesterday, I own an ETF. What an ETF is a basket of goods and services, or a basket of stocks. Okay, it's like a mutual fund. So an ETF, this is the financial sector ETF. So it's a basket of financial stocks. It got hammered yesterday. It's my way of investing in the financial sector, but with a basket of stocks. Instead of me buying like Charles Schwab and just leaving all my eggs in that basket, I buy this. It trades like a stock, but it's actually a basket of financial stocks, and you can do your research on that. But just, you know, today I think it's up 12%. But look at where we were. Let's just go back to a 5-day chart. Here's where we were just a couple days ago. Look at the crash that we saw. Okay, it was a crash from basically through here all the way down through to here. So these markets are getting clobbered. If I had $1 million yesterday, I probably would have bought into this sector, period, and I would have probably made, you know, at least 50% on my money within about 3 or 4 days. But I don't have $1 million to put into this. And I'm not recommending you guys do this as well. My goal is just to educate you guys, give you my feedback, give you my input, and talk to you about things that I own. And this is one sector where I own, you know, a decent amount of stocks. So that's what's going on in the markets right now. Let's see what this is doing for the MBS market and mortgage rates. So here is the Mortgage News Daily. This right here is showing you where the MBS bond is. So this is a bond that trades on Wall Street. That's yield is the biggest piece of your mortgage. Okay, so when this number goes up, that's all you're looking on this screen. This is the price of the bond. All you need to know is if this number goes up, rates are coming down. The bigger the number goes up, the bigger the rates go down. Flip-flop. Look at the chart to the side. It was doing nothing but down, down, down. So what happens in that case? Well, when the price goes down, mortgage rates go up. So this chart has been nothing but down for a long time. So we're starting to get a little breath of fresh air right now. Where are mortgage rates? Well, they're right here. And this is a post by Mortgage News Daily. They do this every day. So if you want to get this, it's a free system. Subscribe down below. You can hit that down below. I have this on there for you as well. So you have MBS Live. It's a paid service for those that really need in-depth research on the mortgage industry. And then you have the Mortgage News Daily that's free. Okay. And again, my newsletter encompasses all this. So you can subscribe to that. I don't sell the data. I don't solicit you. It's there for you to get some guidance in. So what you're seeing on your screen right now are the top 6 programs that people use when they're buying a house. You can see that rates are down to 6.57. I've never seen this volatility in my 34 years of doing this. Not too long ago, and I want to say it's about 6 weeks ago, rates hit 5.99. Okay. Then just the other day, they hit about 7.25. Now they're 6.5. It is nuts. So tomorrow I'm going to go over a site or a web system we use to help us find you guys. So who am I and what do I do? Well, my name is Dan Frio. I do the rate update every day. I'm a mortgage advisor, but I like to go over the whole scope of economics for you guys to figure out what is going on in the economy, because you can't just look at housing and interest rates. What are affecting that? Well, what's affecting that is all the stuff that we talked about this morning. Okay, so that's why I do this. So tomorrow I'm going to show you a system that we use. That what we are is I work at a federally chartered bank. Okay, but we have the ability to use about 90 other banks and mortgage companies. We can use their products and their rates. And I'm going to show you tomorrow how we do that. So that'll help you guys, instead of calling around to 3, 4, 5 mortgage companies, getting rate quotes, getting different opinions, getting this, getting that. You can come to us and we're going to shop your loan to over 90 different companies to see, is there a better rate out there for us to find you? Think of a stockbroker that could go all over the world to find you the best price on a stock. So in one stock exchange, that stock is $10. The next other exchange, you can buy that stock at $9. Maybe there's one that has $8. I know it doesn't exist, but just think of it that way. So you have to call your broker every day and call all kind of brokers to figure out that best price. Why not just use our system? Okay, and I'm going to show you how that works tomorrow. So thanks a lot for watching, guys. If you're new to my channel, please give me a thumbs up, subscribe down below, and hit the bell. Every time I post a video, you get an alert. Don't forget, tomorrow we do have our live event every Wednesday from 8 to about 9:30 Eastern time. Check it out. And it's a live event where you guys can ask any questions that you have in regards to real estate, and we'll answer that live on the web. Take care, guys. Thanks again. I'll see you tomorrow. Bye-bye.